Hi, everybody. Craig Shacklett with URComped back. This is a follow-up with Ray Kondler from Konder and Associates. I know a lot of people got a lot of value out of our first interview on taxes, specifically how it relates to gamblers. And Ray, I know tax season has been crazy already for you, so I appreciate you carving up some time for a follow-up.
No, my pleasure.
All right. Well, I've got a list of questions. So we'll just pop through these and give us your best answers. First question is, if I have 100K in W2G tax forms from slot wins, how much can I put down in gambling losses in the gambling losses line before the IRS audits me? And then parentheses, assume I lost more than I won, but I don't have daily records of my play to prove it.
There's really no magic number. I mean, the IRS always wants you to pay income tax on whatever your income and profit is. So, most people, 100,000 of, gambling winnings doesn't mean it's all taxable. I mean, they can take all of their, slot losses. They could take other gambling losses such as, sports betting and, baccarat and blackjack and things like that. So, the gambling encompasses a lot of different, types of play. So, most people, we haven't seen many audits on gambling. $100,000, you'd have to have a lot of play to get those kind of losses. But if that's what you do basically every day, many hours a day or weekends or whatever, and you have losses to, offset that, then you can offset that 100,000. Doesn't mean you'll get audited. We've had people who had, $1 million of W2Gs, but that's all they did, and they could substantiate their losses, and they, paid minimal tax on, what they had in winning. So, it all depends on your records. If you ever did get audited or reviewed, you would have to show proof of your losses, which would show, include like logbooks of where you went by day, your losses in the various different types of gaming. And then if you prove that to an auditor, which we've done many times in audits, not good thing, not in the money of my clients, but, in referrals we went, as long as you have good records, they'll allow the losses. So, there's really no magic number. I mean, it's what you can come up with in terms of losses, so what you're going to show. But, most people that we deal with have good records, and, they keep track of their daily. So if you play every day or you're playing a lot, you should probably keep records daily of what your wins and losses are, so you don't have to pay, you could pay the least amount of tax on the winnings.
And we got a couple questions about that around, is there a magic number where I really have to worry about getting audited?
No, I mean, I wouldn't say there is one. I mean, there's no set thing in IRS guidelines that, that says, yes, you show this, you're going to get audited. No, that's not true at all.
Okay, here's another question. This kind of ties into the record keeping. And it says, why are there discrepancies between my records and win-loss statements? And just to expand, I'm assuming this person is asking about the win-loss statements they get from the casino. Why isn't it an exact match from what she has?
Right, because if you look at the win-loss statement from the casinos, they're called theoretical. So they're going off of how much hours and minutes you're playing based upon their computer generated analysis. So it's all theoretical. But so, for example, it could be a theoretical loss in the slots, but you don't put your card in. You go play table games, things like that. Those losses obviously aren't going to be on that sheet. So, yeah, and the IRS, we've found recently, they don't really, if you just showed up with a theoretical win-loss statement from the casino, they don't like that as proof. They want to see audits. They want to see books that, records and spreadsheets of the time and amount you lost. So if you just show up to an audit with that, they won't allow it.
So you recommend people keep a daily diary of their gaming. What information, what are the elements that you recommend they include when they're tracking their play?
Well, we usually have, obviously the name of the casino, the date, the times that they played, and basically for the day, what their net win or loss is. I mean, the IRS has something called a session method where they want to keep track of every machine basically you go to in a session. But if you do it by day, we have some logbooks we can, supply if they need us. So, it's basically a spreadsheets by day and the win loss and how much you put in, how much you cashed out, that kind of stuff.
According to the IRS, they want you to log every time you move from the Willy Wonka machine to the Monopoly machine, but in practice, a daily net is generally good.
Yes.
It sounds like, or this question is related to having the casino take taxes out of jackpots.
I never recommend it. I only recommend it in places where people are not going to have the money later to pay the tax if they owed. So if they're not good with money and taxes, maybe they want to withhold some. But I am never a proponent of the IRS holding the money for a year, because if you win in February, you don't file a return to the following February. So they've had your money for the whole year. So I would rather take that money that you would have paid for tax and put it away, invest it or something, and try to make money on that money before you have the IRS out it for the whole year.
What interest rate is the IRS paying on the money they hold for you?
It depends, usually between 5 and 8%.
Wait, are you serious? I was kidding. I thought
they're not going to. Oh. Yeah, they're not paying you interest. They're going to take your money. They're not going to pay you interest when you hold the money for a year.
Exactly. Yeah. So it's better to take it, put it in something safe, and get a little return on it.
Yeah. I mean, I had one lady who won $500,000, and they took out she had to take out $125,000. So that I thought that was good and bad. I mean, they had the money. She didn't have the use of that money the whole year, but in the other instance, she basically has paid the tax already. So in her mind, she knows she's not going to have to come up with a big number if she doesn't have enough losses. Because in February, you're sitting there with a big win. You don't know what your losses or other winnings are going to be in a year, So, I'm not. I will tell you, 99% of the time, I would never have them hold the tax. And I would tell you, all the ones that we do, I don't see many that have done the tax withheld.
Ray, before we start recording, you talked about somebody that watched our interview and reached out, and you helped them claim pro status and save a ton on their taxes. We got a question: how difficult is it to go through those steps and claim pro status on a tax return?
Well, it's not difficult to show it. I mean, you just file the Schedule C, and you show it as a professional gambler, just like a regular, side business. So you just file the Schedule C. You don't have to get approval from them or anything like that. You would just show it on Schedule C. And then if you did get audited, the IRS would want proof that you spend the substantial amount of time doing that professional gambling. And an audit, 15 hours a week or 750 hours a year will suffice on that. So, if you get audited, that's the only time we'd have to prove it, that you did spend that time. But on the Schedule C, it just shows, and you could change every year from pro to amateur depending on how your lifestyle changes.
It says, this question is kind of broad. It's not really phrased like a question, but I'll just read it. Can you claim losses if you do not itemize? And then the next one is how to claim losses and not itemize. So is that possible?
Okay, so the question is, so you claim, if you don't itemize, then you can't claim your losses. So in theory, because they changed the standard deduction now, so singles 12,000 and married joints 24,000. If you have 10,000 in winnings, you can always take your losses against it, but the standard deduction is going to eat that up. So you kind of get screwed a little bit if you don't have other expenses to get over that standard deduction amount. And if you don't itemize and you can prove it, then you could show all the losses on Schedule C as a professional.
Got it. Okay. So if you're not a professional gambler, then you're kind of looking at, all right, well, the W-2Gs are adding to my income, but offsetting the losses, is it worth it to get away from the standard deduction? But you could take the standard deduction if you file as a pro as Schedule C and offset it over there.
Exactly. But it's kind of like, it's a weird calculation, because you also want, if you can file as a pro, you get the losses on Schedule C, and then you'd also get the standard deduction. So it's so much beneficial to file as a professional versus an amateur.
And I know we covered it in the first interview, but just for people that are hearing this, why wouldn't I be a pro? I mean, is this is it mainly an option just for people that are on Social Security, retired, that don't have significant income from other sources? Or
no, not really. I mean, some people file, some people they want to file as a pro anyway because they want to show income, if they need income to qualify for mortgages and things like that, because theoretically it's a side business. Okay. But also, it does, showing any Schedule C on a tax return does have a higher chance of being audited. So, it does increase your chances. So that's why some people don't want to go through the hassle of an audit. So that's it. So it's not like you're cut and dried. You know what I mean? Like everybody wants to do it because that's the way to do it. People that come to me and say, well, I don't really want to get audited and whatever. So then they just take the amateur status. But there are more advantages, I think, in terms of write-offs than just being an amateur.
Well, Ray, here's a last question for you. Assuming there are no, well, this is a two-part question. Assuming there are no winnings to declare, is there any tax liability for the value of comped cruises? Likewise, is there any tax liability for the value of credit card points generated by charging chip purchases on a ship?
Not that I'm aware of, no.
Great. Well, hey, Ray, this has been super helpful. I know there's probably people hearing this, or their eyes are opening and like, wow, they're excited about the opportunity and the options with filing taxes. If they wanted to reach out to you and your firm and maybe get some help around what we talked about, how can they get a hold of you or your company?
Oh, I appreciate that. They can, we're in Las Vegas. My website is Kondler, KONDLER CPA.com. There's an info page. They can send us an info page and we can set up appointments and talk to them, or they can, send general questions and I'd be glad to answer. My email is rkondler, like my last name, so KONDLER @KondlerCPA.com. But they can reach out at our phone number 702-433-7075. And we'd be glad to help them out and answer any questions we might help them with.
Well, Ray, thank you again for taking some time out of the busiest time of year for you, and we really appreciate it.
No, my pleasure. Any way I can help your viewers, I'd be glad to do it. Thank you for the opportunity.